to limit a risk of recession, means to limit means to control the risk of inflation. The nation use some of the policies. What are the policies? The fiscal policy. Fiscal policy is totally and totally related to the tax policies and the government spending. They impose more and more taxes on the general public, right? So that there will be contraction of money. The people will have less money in return. Monetary policy. What is monetary policy? Which is governed by the central bank, right? RBC Bank in India, a Bank of Canada here in Canada, and deals with the change in money supply of nation by adjusting the interest rate. More and more interest, less money will be there in the market. This is the happening in the market these days. Now, next point, what is the depression? A depression is a severe and prolonged downturn in economic activity. So downturn in the economic activity, but this is for the long period of time. So that is known as the depression. So what happened during the depression? Right? Then sharp fall in the growth, sharp fall in the employment and production. These are the indication of depression. So depression is the extreme recession that lasts for 3 or more years, or decline in a real annual GDP of at least 10%. So what happened under depression? So understanding the depression, so what I'm just going to explain, in the time of depression, consumer confidence and investment decreases. Very less confidence in the general public. People don't want to buy anything because they don't have money. The reason being, there is no job, very less job. If the people are not having job, and if they have saved some of the money for the last couple of years, they will be spending that money only for food items, right? Only for just living, and they will not even spend for the shirt or the shoes. So some economic factors that characterize the depression includes substantial increase in unemployment, too much unemployment. And the recently that you might have heard, number of big companies, Amazon and other company, have laid off a number of employees and the software engineers. And also this is happening and happened in other part of the world with the biggest and the smallest sectors. A drop in available credit. Money is not available. If today, if the bank is charging a 6.7% of rate of interest, then how the people will be able to pay that money once they get as a loan? So it is very difficult to get money, right? For even for the home, some people want to buy home. The homes are available, but due to the rise in the bank rate, they are not able to buy home. The reason being, to buying home, the money is required. The people, they have a down payment, maybe 20,000 or maybe $200,000. If the house is costing like $500,000 or a million, and the rest of the money, like after the down payment, rest of the money they will take from the bank. And the bank, if they're going to take money from the bank, the rate of interest is too much. Sometimes the people may not be able to qualify. So that is the big problem. So they will not buy, they will postpone. And diminishing output, production is down because there is no demand. If the unemployment is there, demand of the product and services has gone down. Lots of supplies and products are available in all the stores, right? And why they will demand to the manufacturer to produce more? They will not place any order to the big manufacturers for those goods and services which is already in the store and stacked up, and the people are not coming to buy those. This is also one of the factor that indicate this is the depression stage. Consistent negative growth, negative GDP, right? So gross domestic product, continuously this is going a negative. First quarter, second quarter, third quarter, and continually is going for the GDP as a negative, right? Bankruptcies. So these days, lots of bankruptcies we can see. The foreclosures. People are having their home, right? But they are not able to pay their mortgages per month. Once they are not able to pay mortgage, what the bank will do? So bank will declare a foreclosures. right? So they will bank will sell the money, they'll sell the property, right, and get the money and recover the money from the borrowers. So bankruptcies, government debt default, right? Even the government debt is also there. Government is going to have a defaulter, right? Government is considered defaulter. The government has taken a loan from the World Bank, right? So the government is going to default because the government is not having money. If the people is not earning money, and how they will be able to pay tax? If the tax is less, the tax amount is less, how the tax department, CRA, Canada Revenue Agency, Income Tax Department of India, and other income tax department of all over the economies, how they will be going to collect that money in the form of tax? If the tax is going down, it means the earning of the government has gone drastically down. So government debt, that is one of the factor we can say that this is in the depression period. Reduced trade and global commerce, trading has stopped and almost reduced. Bear market, the two kind of market is there, bull market and bear market. So this is a bear market when stock prices fall. That happened in 2019, last to last year, right? So stock prices were just drastically went down, and people were lose faith in the economy. They try to sell the stock, the share, at any price, and no one was there to buy those shares. So that is the bear market in the stock. This is also the indicator of the depression, and because of the low confidence of the investors, and perception regarding the stock market, that was they think this market is too risky. We don't want to spend money. We don't want to invest in the stock. Sustained asset price volatility, right? So it means volatility means ups and downs. There is no an ups and downs in the market, no buying and selling, and how there will be ups and downs, no volatile. So if the market is not, there is no any volatility in the market, no ups and downs in the market, then how the market will go further? The falling the currency value as well. Low to no inflation or even deflation. If there is less in inflation, this is also one of the factors. There should be little bit inflation, the economy to grow. So if there is a less inflation in the market, again that is indicator of for the depression. Increased saving rate among those who can save. Some people are having their money, they they don't want to spend money anywhere because they don't want, there is a less faith, the confidence is down. They will put money in the bank just for in the saving account, right? Or they can keep their money in home just for the upcoming days, right? Just for living. Now the great depression came in 1929, right? Consumer spending and investment dropped drastically, and huge unemployment was there, and US unemployment went up nearly 25% in 1933 and remained until 1940, then which came down to 9% later on. Poverty and hunger, this is also indication that happened in 1929. Political unrest was there. US economy had faced 33 recessions and one great depression. The stock market crashed on Thursday, right? That was the Black Thursday, October 24th, 1929. It impacted worldwide for more than 10 years. Now, the shortest recession was there, which happened. And this is the vicious cycle of recession. How recession comes? The income of the people that go down. If the income of the people will go down, the people will not buy goods and services. It means the sales of the goods and services will go down. If the sales of the goods and services will go down, if there will be very less sale, then retailer or wholesaler will not put place any order, will not demand. And if there will be less demand, less orders, then production will go down. If the production will go down, what the producer, right, what the manufacturer will do, there will be a lot of employees will be there, right? They will try to lay off all those employees. because they have their own expenditure. So in this way, the recession start, and this is the vicious cycle of a recession. In July 2021, right, it was concluded that the 2020 the recession was the shortest on record at just 2 months, with economic activity hitting bottom in April 2020. Now, recession is there, but we should know how to recover it, right? So, how the recovery start? Recovery start when the income level rise. When the income level rise, the people will have more and more money. When the people will be having more money, definitely they will try to spend those money in buying some necessary or unnecessary money. Means they will be having their income. Which income? They will be having their disposable income. So they will try to dispose, they will try to spend money on some items. When they're spending more money, it means more and more demand for those product and services will be there. If the more demand is there, it means more supply is required. So the wholesaler and the retailer will place an order to the manufacturer of those goods and services, right? So the production will rise. If the production will rise, then definitely to meet the demand, they need some workers, they need some managers, they need some employees to perform those activities. So the employment will rise. Employment will rise, definitely again income will rise. So this is also the vicious cycle, how to recover and how recovery starts. So economic recovery process starts with the implementing the government policies, right? So government makes some policies, government change some policies. If today the government is going to change some policies, for example, the rate of interest, like I'm talking about the bank rate, is the bank rate has increased. If the government is just started reducing the bank rate, reducing the taxes, automatically the people will be having some money with them, and they will try to spend money in the market. So this is how to recover. Economists, they are just expert in this line. They just make some changes and just check the reaction of the market, and just wait for the couple of months, couple of days, and a couple of quarters or a year, and after then accordingly they take the next decision. So consumer price index, that we can see that in the November 1st 2019, the consumer price index inflation, that was the 2.2, but now we can see here the 5.9 in 2023 in the month of March. So if we talk about inflation, these are the some of the countries. That in Canada, 5.9% uh, in the month of March 2023. In USA, 6.4, India 6.52, and Australia 7.8% inflation we can find. And this is also one of the website from where that we can see the number of countries with their inflation rate. So what is the current situation? As per economist, Canada likely or will head into recession in the first quarter of 2023. Like this first quarter is going on, but will far better than many other countries and bounce back faster because of its strong economic fundamentals. The reason being, more and more immigrants are coming from all over the world. This is the biggest reason that Canada will have less chances for in recession, depression, right? So because of the strong fundamentals.